Welcome to Getting Rich with Rich. I'm Rich, founder of Under the Radar Report. We're in celebration mode here at Under the Radar Report because we're approaching our 600th issue next week. Most importantly, one of our foundation stocks, you probably heard of it, Southern Cross Electrical, ASX code SXE, is shooting the lights out. The stock's been a best buy. It's in our dividend portfolio. It's in our main portfolio. I own it. It's a great example of what can happen when you combine contrarian investing with holding a portfolio of diversified stocks. But as we all know, investing is about the future, and that's what we're talking about. We're looking for our next Southern Cross Electrical, always looking, always hunting. One person who has done well out of Under the Radar Report is my business partner, Caroline Mark. She's shown better than anyone what you can do with our research. She basically follows our research and uses common sense. I mean, it's that simple. She's almost doubled her money over the past 5 years, which equates to about 20% a year. I mean, that's better than the returns of most fund managers. Certainly any I can think of. More to the point, you can do it too. That's why I want to mention a few stocks to get you thinking. We hear a lot about tech stocks these days, mostly digital technology. I mean, ASX stocks that you hear a lot about, Megaport, WiseTech, NextTC, Xero. Then you have, at another level, the Magnificent Seven. That's like, your Alphabet, your Amazon, your Microsoft. These stocks just dominate. So there's a lot of news about them because you've got the obvious tailwinds of digitalization of everything. You can't get away from it. You can't get away from someone saying AI within 30 seconds of a conversation. It's like my mother-in-law used to be with Aldi. It's all consuming. Everyone knows about it. It's all in the price and then some. Well, you don't hear as much about medical technology. Certainly we had CSL results recently, but medical technology as a space has really fallen by the wayside. There is that weight loss drug, Ozempic, which has certainly hit the headlines, but outside of that, it's really fallen away. The point is that the more stocks are ignored, the more we're interested, the more there are opportunities to make money. I mean, that is the basic fundamental belief at Under the Radar Report. And that's where we come into our own. Back in the day, no one really talked about Southern Cross Electrical. It was just a boring contracting company. And now look at it. They're in data centers, they're in batteries. Everyone talks about it. But, you want to be investing when no one's talking about it. The two we analyze in this week's report, Cyclopharm, ASX code CYC, and SomnoMed, are interesting. Why are they interesting? Because there is high demand for their products, but they've got big problems, which is why they're cheap. So if everything was going hunky-dory for them, they'd probably be mentioned alongside Southern Cross Electrical. But, they've had problems, which is not uncommon. As an investor, you ought to be looking out for problems because investing is about the future. So investing is about companies solving problems and you being a beneficiary of it. So Cyclopharm's technology is Technogas, basically diagnoses respiratory conditions and has received approval from the US for the pulmonary embolism indication. It's a big deal. It's a huge deal. And the stock really ran hard going into that FDA approval. But then since then, it's really dropped away. And the speed of that decline has surprised even me. I mean, the hurdle of, getting distribution around the US should not be underestimated. But still, it's an opportunity and management has impressed. So we have a lot of confidence in management. Basically, there was a delay in the reimbursement process. But, these delays, this is part of the business. You're not investing for everything to go well straight away. If it goes well straight away, the price will reflect that. You have to be encouraged that problems are going to be overcome. Similarly with SomnoMed, probably its problems are deeper, I would say, than Cyclopharm. This company has a treatment for sleep apnea. But like Cyclopharm, there's huge demand for its dental-based sleep apnea treatment. Basically, that's differentiated by the ResMed company, which produces the CPAP or the reverse vacuum, which is far more invasive, but yet hasn't had the same problems in getting it out to market that SomnoMed have. So SomnoMed's problems are being overcome. More to the point, they've been recapitalized by Cornerstone shareholders. So you've got the backing of some big money, and they've got that breathing space. So you're really backing management to get Rest Assure, which is their innovative technology, which really brings them in line to CPAP or to ResMed's product. It monitors your sleep patterns. It is innovative, hasn't been approved, but SomnoMed, they are improving their manufacturing. Yeah, there were some problems in the Philippines, in the Manila facility. But this is what it's about. It's about maintaining the faith when you haven't paid too much. And these stocks, I think, are good value. But, when you see our risk profile on the stocks, you'll see that it's very high. So they're not for the faint-hearted. Life's about investing, building a core portfolio, and then building up your tolerance for risk so that you can appreciate that some of these stocks can contribute to your portfolio over the long term. You don't want to be buying a stock and thinking, oh, it's just going to double tomorrow. I mean, that's just not the case. That's the point of investing, is being contrarian and investing across a number of stocks. Like, I won't lie, investing in small caps is often not as intuitive as investing in a bank or a retailer. You need to have some leaps of faith. You need to do some lateral thinking. Often we talk about industries that are emerging. You might not have direct experience in them. But our strength at Under the Radar report, this is the real strength that we have, is communicating difficult ideas into simple action-based concepts. I'm not just talking about, buy, sell, hold recommendations. I am talking about that, but as well, I'm talking about, understanding the industry and why, even though it is complex, we can make a simple pathway for you to make money, or not, as the case may be. Caroline made a lot of money from uranium stocks, a lot. So we were able to identify and simplify why, despite the obvious dangers and complexities of nuclear-related technology, the stocks were worth investing in. And now, what we've been talking about is more and more the orthodoxy. So that's what being under the radar is about. It's being in front of the market. So next Tuesday, we have our analysts doing our Ask the Analyst webcast. So that's exciting. So members are invited to that. And our focus will be on demystifying our high conviction stocks. We're also there to take questions, and that's what we really love, interacting with our members. So see you on Tuesday.